Good morning from London. I'm Anna Edwards alongside Guy Johnson and Tom Mackenzie. We're an hour away from the opening trade. Here's what you need to know. The French Finance Minister tells Bloomberg the government, quote, won't be blackmailed over budget demands from Marine Le Pen. Her party chief says they will topple the government unless there's a miracle. Stellantis CEO Carlos Tavares quits following a dispute with the board over how to steer the troubled car maker away from weakening sales and a stock slump. Plus, traders start the final month of the year with a fresh US jobs report on the horizon later this week.
Let's check in on the markets then. You're set for a challenging open in Europe after a week of gains. European futures pointing lower by 0.9% with a focus, of course, on France. FTSE 100 futures currently just a little off by about 0.1%. Japanese yields in focus. They increased. The yields were up on the back of comments from Governor Ueda over the weekend in a newspaper, seemingly trying to communicate over their decision and ahead of their decision December the 18th, building expectations that they will go again with a hike. Though, of course, that is no big certain. Euro dollar in focus. Softness again as a result of dollar strength, but also the machinations around the French budget. 105, currently down 0.4%. The countdown to the open and the opening trade starts right now.
The French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
Good morning, good Monday morning. Start of December. Some things don't change right now. Politics remains absolutely front and centre. That was the French Finance Minister in conversation with Bloomberg's Caroline Conan over the weekend. He says he will not be blackmailed. Bardella at the RN saying we need a Christmas miracle to get a French budget through. We are setting ourselves up for quite the week.
Yeah, absolutely. We will see if we get that miracle. And if we don't, then the RN plans to topple the government. That's the latest line coming out of the RN chief, Jordan Bardella. And so we see the euro under pressure. We see futures, French bond futures under pressure over in the Asia session at least. So we'll wait for around, 28 minutes time when we get the open of the bond market here in France, here in Europe, to see how markets respond. Of course, on the other side of things, we had the S&P rating agency on Friday not changing their rating. There had been a fear that they might cut the rating on France. And so we wait for a number of events this week where we could see the triggering of a no-confidence vote, whether that's Wednesday over the social security budget, whether it's Friday over public finances this year, or whether it's the budget itself in the middle of December. There's plenty of ways that this could go wrong.
Potentially today we could start the process, though, of the build-up towards a confidence vote. It could come. We could start to get the idea that maybe one is coming this week as early as today. Does this remain a French story? Is this a European story? Clearly, this must have European implications. The euro now is beginning to react to what is happening in France.
And to what extent does it factor in, to your point, an ECB that will have to do more to address some of these growth concerns on the back of the stasis that we're seeing, not just in France, but also arguably in Germany as we head towards that election? And should we be pricing in more ECB cuts, given some of these challenges? In terms of what else we're looking at as well, slightly different dynamics, just worth noting in terms of Chinese bonds, where yields have dropped below 2% on expectations that you're going to get more stimulus coming through. We're also looking, I know, at one major corporate story, which you have an eye on, which is Stellantis, and change at the top there. And you have to wonder whether this is or at least giving a steer as to whether or not similar stories going to be unfolding for other car makers as these executives come under challenge.
So this is the company that is the OEM that has performed worst in Europe. This is Stellantis. This was a company that was basically created by Carlos Tavares. He has put this business together. Jeep, Fiat, Peugeot, etc., all being brought together into this business. It's had an absolutely shocking year in terms of its performance. He was expected to remain in place until 2026. He is now not going to do that, and we're going to have some sort of interim before we get a new CEO coming in at some point next year. Clearly, huge tension with the board. But what does this company now need to do? What does this leadership now need to do in terms of the turnaround plan? What does that look like?
Still got the same problems that it's been facing last week. We had a profit warning from the company in September. No change in guidance over these events, but the market will still be jittery and nervous around a change in CEO. But still, EVs in Europe, it's a sluggish market. The Chinese market looks sluggish. And they're still dealing with the tariff story, of course, out of the United States. The stock price has been under pressure. So still some of the same issues that we saw under Tavares will have to be faced down by a temporary leadership.
Yeah, so to what extent you're getting a melding of the stories that are kind of impacting the broader sector, but also the idiosyncratic stories around Tavares, because the reporting seems to suggest that not only the unions, the board, but also the dealers as well, particularly in the US,
America,
when it comes to the Dodge, the Ram and the Jeep. And one analyst saying, look, there's going to be no love lost in terms of the dealers.
They won't miss him, apparently.
They were not going to miss him as a result of this move. So whether or not this is just more of a Stellantis problem versus... But he was known as the turnaround wizard. That's the other...
Well, he was known as a cost cutter.
And that doesn't always make you friends. And that seems to be what
Generally,
the reporting is bringing out,
and he clearly wanted to resurrect, rebuild his reputation, and maybe putting short-term needs ahead of the long-term needs of the business. Maybe that's what the board ultimately decided it didn't want to do. So we've dealt with the politics, and you do feel at the moment we're in a very sort of politically driven, headline-driven kind of a market. We've obviously got some of the corporate stories which are worth monitoring. Do we focus back this week and the rest of the month on some of the big central bank stories? We've got payrolls out on Friday. Powell, I think, speaks midweek as well. BOJ's coming up.
So Mark Cranfield from our M-Live team telling me in the last hour, for him, it is more about the central banks this week. No decisions this week, from the major central banks. But what we hear from central bank officials, that, he says, is more important than non-farm payrolls data. You may take issue with that. That's dropping, of course, non-farm payrolls data on Friday. You're probably going to get a revision up for the October numbers because, of course, all those factors at the time around hurricanes and around strikes in Boeing. So those numbers could be revised up to 50,000. That's the view from Bloomberg Economics. 200,000 is the broad print for November that's expected from Bloomberg Economics. They actually see the unemployment rate edging higher to around 4.2, 4.3%. So they're arguing that this number is not going to be telling a particularly strong story about the labour market of the US, as some of those factors are washed out, like the hurricane and Boeing workers coming back to work.
Yeah, it will be interesting to get that sort of cleaner read on the US economy because of the one-offs coming out of the data, as you suggest. But I'm actually looking ahead a little bit further. So, yes, we've got Powell speaking midweek and we've got payrolls on Friday. But some of the movement overnight with the Chinese PMI data, both formal and the Caixin, all of that, and the UADA comments, reminding me that we still have, from the Asian geography, a lot of things to find out in December. Will we get more stimulus from China? Will we get triple R cuts, further triple R cuts? And will we see a hike from the BOJ? That seems to be what some of the communication over the weekend from UADA has been
we've got a really
planting the seed of.
We've got a really busy 2 weeks in terms of the central bank story. I think the BOJ is going to be absolutely fascinating. It feels like the Fed's still an absolute coin toss at the moment. Are we going to have to see a change in tone, a much more aggressive tone? The Doves appear to be winning at the ECB. Does that continue and become a stronger narrative that we need to factor into the euro as well? So it's a really busy 2 weeks coming up from a central bank point of view. But then you've got politics as well on the other side of it. I note that the CAC 40 is down by 1.3%. Other European benchmarks this morning sort of fairly flat. Yeah, the futures calling us down fairly flat. The number at the moment looks very grim for France first thing this morning. We'll come on to that in just a moment. We'll talk about it with Fabricio Bloisi. He is the CEO of Prosus. We'll get his tech take. José Manuel Campa, chairman of the European Banking Authority, is going to be joining us. And we're back to those European equities with Sharon Bell, senior European equity strategist at Goldman Sachs. Tom.
OK, here's what else to watch for this week then. Today, Biden will be visiting Angola, so he's on the ground for us, as is Jen Zapasaja, who's on the ground for us. Biden is on the ground for his own reasons. On Tuesday, NATO foreign ministers will be meeting in Brussels. Wednesday, it's the Fed Beige Book, so giving us some more detail and colour in terms of the health of that US economy. Of course, there's also the 2024 Monetary Policy Symposium. And on Thursday, it's the OPEC Plus meeting, which is going to be important as well. They kick that further down the line, of course. They moved that back by 5 days. Will they come to a consensus on whether or not to put more barrels on the market or to hold off on that? And on Friday, it is the non-farm payrolls print out of the US with an estimate of around 200,000.
Let's update you on what else you need to know this Monday morning. With just weeks left in office, the US President Joe Biden has signed a sweeping pardon for his son, Hunter. This reversing his previous stance that he would not use his executive powers to aid his son. The pardon covers criminal acts that Hunter Biden has been convicted of and any other potential legal challenges that may await him. Ireland is heading for a return of the existing coalition government led by the party of Taoiseach Simon Harris, Fine Gael, along with Fianna Fáil. With two-thirds of the results now announced, the two parties are on track to get more than 80 seats, meaning that they will still need the support of a smaller party to get the 88 seats they need for a majority in the Dáil. There has been a fourth night of violent protests in the Georgian capital, Tbilisi. This as the government sought to suspend membership talks with the EU. The country's pro-Western president is defying plans to replace her and calling for the country's constitutional court to annul October's election, which was won by Georgian Dream, a pro-Russian party.
Coming up on the programme, Black Friday sales accelerate in the United States with online shopping a bright spot, it would seem. We will dive into the numbers as retailers prepare for Cyber Monday. Plus, President Biden heads to Angola, fulfilling a promise to visit Africa just weeks before leaving office. We'll be live in Angola ahead of the meeting with the country's president. Up next, we will talk markets. We will be joined by Robert Dishner, Senior Portfolio Manager at Neuberger Berman, and a great voice to talk about the international perspective on French debt. We will talk about that. We will work through the latest news lines and what that means for French debt investors and for the Eurozone more broadly. If you have any questions, if you'd like to get involved in any of these guest conversations, then this morning, as every morning, you can get in touch with us. IB plus BBTV Go. That is the function to use on the Bloomberg terminal. This is Bloomberg.
Monday morning, good morning. I'm looking at my fair value calculation on my Bloomberg terminal. CAC 40 expected to open down by now 1.5%. Other European equity benchmarks look like they're going to open fairly flat this morning. This as France's finance minister has rejected Marine Le Pen's ultimatum over a new budget law, even as the far-right leader continues to threaten to push a vote of no confidence against the current government. Bloomberg's Caroline Conan spoke exclusively with the French finance minister Antoine Armand.
We respect each and every MP, and we respect each and every people in France, whatever they decided to vote or not to vote, of course. But what's my responsibility as a finance minister is to commit to the 5% target that we decided to have at the beginning of our mandate. Not only for France or for the government, because it's now needed in order that Europe still remain a country, a continent of prosperity. That's what we aim at. And for that, we need all political leaders to be responsible.
With these concessions that we've seen in the budget, they're going to cost about 10 billion euros. Does that mean you can actually keep this 5% deficit target? Or do you believe perhaps it will be slightly higher, like 5.5 or perhaps higher?
As I told you, our commitment to reduce the budget deficit towards 5% in 2025 and towards 3% in 2029 is not an option. It is something we are very carefully looking at. What does that mean?
But can you actually fulfill this?
Yes, it means that at every time that we made adjustments on our budget, we compensated it with saving, with new measures. It's clearly an important point to underline here. We are committed to this 5% target in 2025.
The French finance minister speaking over the weekend to Bloomberg's Caroline Conan, who joins us now from Paris. Caroline, now what?
Now we're going to see today, Marine Le Pen, as you know, has said this Monday, 3 p.m. French time, 2 p.m. UK time, as a deadline to decide whether she will support or not a vote of no confidence and make the government of Michel Barnier collapse as soon as this week. We heard actually from the president of the National Rally on the radio just before this show saying it would take a miracle for Marine Le Pen to change her mind. So clearly, is she bluffing? Is she not bluffing? You heard from Antoine Armand, the French finance minister. He doesn't want to have any blackmail. He doesn't want to have any ultimatums from the National Rally. He's also perhaps opening the door to the socialists, which I thought was quite interesting because they also have 70 lawmakers in parliament. They can also move the needle because you need the socialists to join forces with the National Rally in order to make this government collapse this week. So we'll have to wait, I guess, for a few hours in order to see if there is a miracle, if there is a bluff from any side, or if there is a compromise that is found.
Caroline, thank you very much. Bloomberg's Caroline Conan, more from her later in the programme. Joining us now, Robert Dishner, Senior Portfolio Manager for Multi-Sector Fixed Income and Head of Trading for London and Neuberger Berman. Very nice to have you with us, Robert. Let's start with France. We'll pivot the conversation. We'll get your take on the Fed a little bit later, as it's a big week there as well. But let's start with France. The Finance Minister saying we won't be blackmailed. The RN now saying that they will bring down the government unless there is a miracle. Do we expect a miracle by 3 p.m? And if the government falls, what difference does it make to you?
Look, whether the government falls or not, France's issues are bigger than that, right? They have the large deficit. They need to get that fixed. Growth is slowing across the Eurozone. So a lot of the issues that whether we get a solve or not, it just matters whether we get a relief rally before we see further issues in French spreads. It does not appear like it's going to come from the rating side. S&P actually gave France a pretty long leash on Friday, talked about a protracted period of growth declines. So, again, the risk is that you do get something and it snap rallies. But again, the direction of travel does feel like we're going to be moving wider on French spreads here.
So we move wider. So we've repriced, and you think that repricing, we've repriced to sort of 80 basis points from where we were pre this crisis, of course. There's talk of whether we go to 100, whether we go to 125 from some banks. But that doesn't matter necessarily. It's just the fact that we are a little bit wider than we were, and we stay there.
Yeah, exactly. So my guess is we're going to find a new equilibrium level for French spreads. Whether that's 80, 100, or 120 will have to remain to be seen. But again, this is a French issue. France also has an issue where 50% of its debt matures in the next 5 years, right? So how do they refinance that and at what rates? That compounds the problem in terms of some of the overall fiscal as well.
French problem or European problem?
French problem for now.
Okay.
I mean, we've seen, obviously, good performance out of Greece. They're repaying some debt early. Good performance out of Spain. But really, the next risk is, frankly, the German elections, right? And do we get some fiscal out of Germany, which is a little bit of the concern, because if you look at some of the statements we've gotten from mayors, there is some chance that they do some fiscal there.
Time for a big insurance cut from the ECB, 50 basis points?
That's not our base case right now, but especially given the comments from Schnabel last week, although we're a little confused at the neutral rate being as high as 3%, if I'm being honest. So probably at 25, but again, they do cut 5 times next year, get down to that 1.75 or 2%.
Do you see any value in European sovereigns at this point?
Absolutely. So in particular, look at a place like Spain, right, where you've got good growth numbers, you've got good relative value. I mean, granted, it's now trading, at tights to France or inside of France by the most since like 2008 or something like that. So, there are value across, a number of the countries within the Eurozone. So there's a lot of relative value opportunities there.
When it comes to the US, we've got Jay Powell speaking later this week. We've got non-farm payrolls on Friday. Markets seem to be expecting that there is a greater chance now that they go again later this month with another cut. Where do you land on that, and how do you look into 2025?
Sure. So, for right now, our call is that they do cut this month, but they're likely going to be done after that. And so remember, we get projections this month as well. But it is a big week. Powell's either going to cement the rate cut, my guess is Wednesday, or he's going to push back against it. So he wants to either go into this meeting either priced at 20 basis points or priced at 8 to 9 basis points, depending upon the data. And so, but it's a big week. We get ISMs today. We get services ISMs. We have jobs on Friday, as you've noted. So there's just a lot. And the Fed will also get inflation next week as well as retail sales before their meeting. So there's a lot this month.
There is a lot. And how do we interpret the Fed then, Robert, when it comes to the politics? Because the Fed doesn't want to talk about the politics. The Fed doesn't want to talk about things that Powell might or might not do, doesn't want to speculate. But the market, on the balance of everything, is assuming that we will get some more tariffs. And therefore, to have these conversations that don't reflect any of that or any of the likely policies of President Trump seems a little sort of removed from reality. So how do we interpret the Fed in that environment?
Sure. So the Fed will bring stuff in when it becomes likely that it will happen, right? It's tough for the Fed to speculate, but they are looking at the fiscal. The U.S. fiscal is on a poor trajectory, so they will take that into account in terms of how they're looking at policy. But again, given the underlying strength of the U.S. economy or resilience of the U.S. economy, I think the Atlanta Fed's sort of at 3% consumption right now for the fourth quarter. The Fed doesn't need to do much more to continue to support the economy. And as you've noted, we're looking to get a recovery in jobs this Friday, as well as a restatement of the October results.
It's interesting. We're talking a lot about data. Are we back on the data? Are we back on the Fed? Are we back on the ECB? Or are we still trading politics? In terms of the kind of dominant themes for the markets going forward from here, is the Fed now playing second fiddle to the White House? Does the ECB play second fiddle to what is happening in Paris? Which is the dominant theme that markets are now latched onto?
No, it's a great point. The market can only look around one corner at a time,
Precisely.
right? Exactly. Yeah. So I think that's going to be interchangeable depending on the day. And what we're likely to see is some decent volatility over the next 2 weeks. as they move from data to central banks.
Are these two things aligned? Are politics and the data, do they tell the same story?
Not necessarily, right? And so, you would think, for example, in Euro area, you're getting negative growth, potential strikes in Germany and VW, but yet German rates may or may not, rally on that, and we're seeing the ECB. So the answer is maybe, but maybe not, and it depends on the day. I mean, it's been a brutal, 4 or 5 weeks in terms of the market's attention span.
It's pretty fascinating when you look. I just want to bring the focus to the Bank of England and to the UK, where yields across gilts above 4%, right? And then you compare that to the Italy 2.3% on the 2-year, 3.3% on the 10-year. Are the markets underestimating a BOE that may have to go further and faster, or is the BOE going to be more aligned with the Fed next year?
It's a great question. The problem with the UK and the BOE is that, and I'll be talking about this separately on Thursday, unfortunately with this budget, we may get all the sort of the negatives of austerity, but with inflation. So we're not going to get the inflation decline. So if you look at the OBR report, you look at the Bank of England forecast, we're getting that increase in inflation. Yet when we saw from the latest GDP report, growth is slowing in the UK. And so, how does the Bank of England react to a potentially stagflationary environment, which is tough? And my guess is they're going to probably fall down a little bit on the cautious cut side as opposed to the aggressive cut side.
So cautious cuts. That seems to be the message we've already heard from the Bank of England, doesn't it? Going cautiously, and that is justified then by the seemingly slightly stagflationary environment that we may find ourselves in.
Exactly. And so we'll see that. Now they could pivot at any time, and we'll have to sort of see how these inflation numbers play out. One of the things too that I love using the Bloomberg things, but you can You can see that the inflation numbers in the UK are really driven by rents. It's almost as bad as the U.S. So if you look at the latest report, something like 57 or 58 basis points of the 2.4% headline comes from the rental number.
You say it's that similar to the US. Well, sometimes the gilt market is just similar to the US, and sometimes we're sitting here wondering, is the gilt market, is it always looking across the Atlantic? Is it sometimes looking across the Channel? Because those two stories are going to look very different in 2025.
Exactly. And one of our concerns all year has been the increase in correlation across accounts, and in particular the gilt market. We wrote a piece a number of months ago, like, why do you even have UK economists? Just use your US one. So,
you could be a very unpopular man.
What happened to your Christmas card list?
but yeah, I mean, no. The issue is those correlations, and the gilt market's really been taken by a number of other markets.
Okay, let's wrap things up. We'll talk about the Christmas card list another time. We'll see what the UK economists respond to that. Tom, it's interesting. Yep. You've got France trading 86 over Germany this morning. Does that number increase if the French government falls a little bit? We get news of that falling later on this week. It's interesting that the CAC 40 is down sharply this morning. I can't quite work out whether it's down on French politics
or Stellantis. Called lower by more than 7%.
Kind of a combination of the two, I suspect.
Yeah. Top line is set for a pretty brutal session in terms of French equities. Robert, thank you very much indeed. Robert Dishner, Senior Portfolio Manager at Neuberger. Berman, coming up, we're going to speak to Fabricio Bloisi, the CEO of Prosus, joining us in the studio. The business, of course, with that exposure over in China to Tencent, disposing of some assets in China, but also a successful IPO over in India, reporting first-half profit as they come through with more than 2 billion customers worldwide. So we speak to the CEO of Prosus. That is coming up on how they plan to position and drive revenues in the years ahead. Stay with us. This is Bloomberg. Welcome back. Happy Monday. 30 minutes from the start of the opening trade. Let's check in on your futures, and you should be braced for a pretty bruising day when it comes to European markets, with equities here called lower by a full 1 percentage point. Over in France, though, an even tougher session is what is being lined up for you. CAC 40 futures currently pointing lower by 1.4%. Stellantis, yes, is a drag. That's called lower. The last time I checked, between 6-7%. But also, of course, French politics and the standoff there with Jordan Bardella talking about a miracle and the toppling of the government unless that miracle comes comes through. S&P futures stateside pointed lower by 0.2%. Let's check the bond markets then. Trading has started, cash trading, and we, of course, zero in on the benchmark 10-year over in France. Yields up 4 basis points, 293, so the spread is about 85, 86 basis points versus the German equivalent, as you can see, 293 on the benchmark 10-year. Over in Italy, BTPs yielding 329, yields up just 1 basis point there. So we keep a close eye on euro and on the yield story, of course, in the sell-off in terms of French debt.
When we talk to lots of equity analysts about politics, and we try to talk to them about the politics, they quickly try to pivot us back towards some of the corporate stories and some of the earnings stories. So let's do that ourselves now. Prosus has reported a first-half profit after selling stakes in online businesses in China and South Africa. Group-adjusted earnings before interest and taxes came in at 60 million, compared with a loss a year earlier. We're joined now by Prosus CEO Fabricio, who I'm very pleased to say has been globetrotting and has come back to us in London to talk to us once again. Fabricio, very nice to see you. So looking at the underlying numbers that you've reported today, big jump in the EPS number, revenue just about where it was supposed to be. What's the overall message that you're communicating with these numbers this morning?
Hello, everyone. Very good to be here again. Big pleasure to be here. Look, we have very ambitious goals. We want to create $100 billion in value in Prosus as a European leader tech company. And I think we have a good start. We are growing very well in revenues, more than 26%. Our profit increased by 5 times. We just made an IPO of $13 billion in India. We just sold $2 billion in assets. So I think it's a good start, but more than that, the most important, we are innovating much more. We are moving faster. We have a culture of innovation and disruption. And that's what Europeans need. That's what the world needs in a moment of so much change. So I'm excited.
OK, so you're excited. That's clear. You want to double the value of this business in just 4 years, I think. Fabricio, are you on track? Given what we've seen today, you're on track for that?
I think we have a very good start. The numbers I just said keep me more confident than ever that we have an amazing opportunity. I believe there is so much investment happening today when you talk about disruption in US, but Prosus is positioned to invest in Europe, in India, in Africa, in Latin America. All these regions are going to need as much as innovation as US, as much as AI, as much as disruption. And we are very well positioned to explore that. So I think we are on track. And I'm going to keep coming back here to tell the good news.
OK, good. Come when there's bad news too, though. That's fine too.
Perfect. Give us some specifics around how you plan to create that additional value, $100 billion additional value. What specifically are you looking to do? Where are you targeting those investments?
Good. Look, we have many businesses doing quite well. So today we're releasing the results of our business. We are very good in food delivery. We did the IPO in Swig. We are doing another IPO in Talaba together with Delivery Hero. Our iFood business is growing super fast. We announced that 2 months ago we got 200 million orders. I checked the numbers today morning. It's like 120 million orders we are getting now. So we are doing very good in food delivery. We are doing very good in classifieds in Europe, South Africa, Latin America. My big view is, first, we are in a moment of disruption where technology is going to change everything. We have 30,000 people outside the US investing in innovation, technology, artificial intelligence. There is trillions of dollars of value to be created on this area. Also, we are creating a really strong ecosystem. So again, we have ecosystem in China with Tencent, we have ecosystem in the US with Microsoft and Google, but we are creating an ecosystem that connects many countries that require innovation and investment, and we have the capacity in terms of people, innovation, technology, we have the capacity in terms of investments. So I'm quite confident.
How vulnerable are you to politics when you think about your Chinese investments?
Look, China is the biggest market in the world in terms of internet. I just came back from there, and Tencent, our investment in China, has more than 1.3 billion customers in just WeChat.
But for that reason, the Trump administration could put a target on your back.
The Trump administration is going to focus in reducing bureaucracy in the US, what I think it's great. It's going to focus in more technology. Elon Musk participates, and I think it's great. So and the market in the US is very happy right now. But remember, the Chinese market is also the biggest market in terms of users, of growth. We just released Tencent numbers, and they are amazing, growing fast, very profitable. So I believe there is a space for a big US vibrant market, and there is a space for a big Chinese vibrant market. But actually, my focus is neither of those. My focus is how I'm going to create $100 billion additional in India, in Europe, in Latin America. I think there is more than space on this area. There is a requirement, there is a demand for big investments on these areas, and we are ready for that.
What is Prosus? What is it going to become? You've come out of this period with a very complicated structure. You're trying to simplify it. What does the end result of that look like?
This is best. We simplified our structure substantially. We are an e-commerce internet company operating, investing and operating outside the US. We have one big investment in China, that is Tencent. Yeah. But what we are doing, creating the best in class, the world-class companies outside the US and China. And we are doing that in Europe, Africa, India, Latin America. We have a very good track record. India, for example, we started investing 7 years ago. We did one IPO 2 weeks ago.
Yeah.
There is more 30 investments in India and many more IPOs coming.
Why don't I just invest in an Indian company that's a speciality in India? Why do I need to invest in a company that has all of these different footprints in all of these different jurisdictions? Why do I need that structure as an investor?
I think if you as investor can invest directly in one good company in India, please do it. We are not here just to do any random investment.
Why is your structure the right structure?
What we are doing to do is to share the ecosystem benefits. I have so many good people, technology. I have 30,000 people and a lot of investment capacity to not only invest in India, but share what I'm doing in iFood with India.
So the sum of the parts valuation is greater because you get that
the ecosystem
that ecosystem that exists. So the value is in the ecosystem.
It's amazing value in the ecosystem, and that's the biggest change of me joining the company. I think 6 months ago, the company was many investments. Now we are saying together we are one of the biggest big tech companies in the world that can invest in India, Europe, Latin America better than anyone else because we know technology, culture, innovation, speeds, and that's what we are delivering. This is just the first result.
And Fabricio, last time we spoke, you told me about AI and about how it's going to change your business completely.
Yes.
Can you give us an illustration of how quickly that change is manifesting itself?
Amazing. Last time I came here, I talk about how AI is already changing our business. For example, on how we do logistics or fraud management or personalization or how we make the business run better, faster, and cheaper. And we even shared all our internal data with our investors because we want to give real cases of AI usage. What we are sharing today in the new results is that we started doing the companies better, but now we are doing the customer experience is better. So what we are doing now is what we call large commerce models, is to use our data, and we have billions of transactions of data, to train models to understand what users want to buy. How can we serve them better? So that's the next phase about what we are investing.
It's about better tailoring the advertising?
Not the advertising, the experience, what he wants before he asks, what food he's going to ask before he asks. Because very few companies, again, outside US, has so many data on e-commerce as Prosus, and we have not only the data of 2 billion customers, but also the investment capacity to take the best of the large language models and apply that to e-commerce. That's our big bet, and I believe if we succeed on that, then we will create a great competitive advantage.
Yeah, and you've talked about the cost cutting as well, internally, as a result of implementing AI. Can you put a dollar number on the internal efficiencies and maybe the market potential of some of these AI investments? Do you have a rough ballpark number that you and the team look at when it comes to that potential?
We just publish numbers on many of our businesses because many people talk about AI, but let's say it's just like a buzzword, AI. We said, let's make our numbers public. So we said we are saving 30% in advertising in iFood. Our fraud reduced from like 1 or 2% to 0.1% in the last 1.5 years because of AI. Our logistics is around 20% more efficient because of AI. In OLX, we are approving, I don't remember the number now, but let me say 1 million, more or less, new listings automatically. So you can just take a picture of something you want to sell, and it's approved 97% because of AI. So we are sharing this data, and I think...
Are you building your own large language models? Who are you using in terms of what is the basis of the software? Is it NVIDIA software that ultimately you're using for this? Does the AI experience become commoditized? I'm just wondering how everybody's very excited about this AI bubble right now. What's real, what's not real from your perspective of having to use it?
Perfect. We have a platform called Token that we connect all our employees to our AI system, but Token uses all the language models. It uses OpenAI. We have a very big partnership with them. It also uses Llama. So we use all the language models to serve our platform. I think you are right. There is a lot of, how can I say, buzzwords and people talking about AI and very few people really delivering. But don't lose the perspective to understand that this is a technology so important as industrial revolution. Everyone is talking about that because the impact is really big. In a few years, all companies, including the media companies and the e-commerce companies, are going to run different because of that.
But the internet was like that as well, but a lot of companies started off looking good and didn't end up being good. Which ones, to your mind, look good and are doing it well? Who are going to be the winners in this process? Give me like 2 or 3 names of the companies you're working with that you think are going to...
We work a lot of OpenAI, for example. We just released it a few days ago that we are using the voice services of OpenAI to talk with delivery drivers to support them better without having to use the smartphone. So we are using, today, customer experience. 70% of our customer experience is done by AI robots now. So we are using AI to really make our costs better and serve better our partners and serve better our customers. And this is just the start. You said internet, many companies failed. Yeah, in AI, lots of companies are going to fail. But the best ones are going to be the leaders in 3 or 4 years. So we will be there.
Still haven't given me a name, but we'll see. We don't know yet. Fabricio, great to see you. Thanks very much indeed. The CEO of Prosus. Coming up, headwinds for the banking sector, the European Banking Authority warning over geopolitical risk and, of course, sluggish growth. We are going to speak to the EBA chair, José Manuel Campa. The annual risk assessment report has just dropped. We'll bring you the details of that next. This is Bloomberg. Minutes the opening trade here in Europe. It looks like French assets are going to be under pressure this morning, not only because of French politics, but also the fact that it looks like Stellantis is going to open sharply lower within the auto sector as well. Before we get to the opening trade, let's talk about what is happening in more detail with the European banking sector. It has been a significant focus of late. The European Banking Authority is out with its risk assessment report this morning. It says the failure of many lenders within Europe to cover their cost of capital is one of the challenges that this industry faces. The EBA's newly released risk report also highlights the bank book values are still higher than market valuations, meaning as Citi reports suggest that EU banks' profitability seems to have peaked. All begging the question, is consolidation the answer for European banks? Joining us now, the chair of the EBA, José Manuel Campa. José, good morning. Let's talk about it. Despite maintaining double-digit ROE levels, a substantial number of EU banks currently fail to cover their cost of equity. The next paragraph in your summary talks about the lack of M&A activity. It remains subdued. José, does the European banking sector need consolidation to resolve some of the challenges that you highlight in your risk report?
Well, I think consolidation, first of all, good morning. And I think consolidation is one of the possible answers that the banks can pursue. More important, I think they need to enhance their business models going forward to make sure that they can obtain an adequate return on capital and sufficient return on capital so as to pay this cost of equity, as you highlighted. Consolidation is one of the ways, because one of the big challenges that the industry has, of course, is the investments that they need to confront with the digitalization and technological revolution that will require large investments from their side. So in that part, modernizing their business models through mergers and acquisition is a good way forward. But of course, it will depend on the project that's being put forward by the merging banks. It will have to be a better project than the existing project of the two banks that propose to merge. So it will all depend on the individual proposals.
The impression we get, and we watch what is happening, of course, with UniCredit with a great deal of interest, is that as soon as banking consolidation is proposed, either domestic or cross-border, European governments quickly come out and give a very firm no. How on earth do we get bigger, better, more stable banks in Europe if European politicians are not on board with the idea that consolidation needs to happen?
Well, I think that we need to make sure first that we convince the politicians. Actually, before the politicians, we need to make sure that we convince the market makers that going through mergers and acquisitions is a good way forward. And particularly for us being a European authority, cross-border mergers so that we can consolidate the single market in Europe is a good alternative, because many of the mergers announcements that we have seen over the last few years have been mainly domestic consolidation, not international consolidation. So I think first the business case has to be there. then we do have processes and procedures. We have supervisors, supranational supervisors in the case of the euro area that need to assess this in a proper way. We have competition authorities that also need to assess them. And the role the government play is relatively minor. So we need to make sure that they know what that role is and that they play it accordingly.
Good morning to you, Jose. Can I ask you about the commercial real estate space? That has been an area of concern for you and for many who follow the banking sector, in particular geographies specifically. On commercial real estate, you say in your report that we are seeing an increase in lending to that area, but a lot of that is to do with restructuring to existing customers. How sure can you be that banks are really valuing exposure to commercial real estate accurately at this point?
Yes, as you very rightly point out, this has been an area of focus for the last quarters. Commercial real estate has been going through an adjustment in prices. We think this is also subject to a structural adjustment due to new market practices around the world. So it's been an area of focus. Banks have been asked to be very careful in their assessment of both the new loans they provide to commercial real estate entities, as well as the assessment of the collateral that exists supporting the existing loans. It is true that there's been an increase in lending to those sectors. Part of it that we think is refinancing loans that are becoming mature. I think that overall, that growth so far has not been very significant. It's been positive, but not very significant. And we do have the supervisors, and we highlight that in the report, we asked them to put a lot of emphasis on making sure that each loan, as well as I said before, each valuation of collateral behind those loans is properly assessed and regularly assessed, because the evolution of prices can change over time. On the good side, we have seen a little bit of stabilization of prices of commercial real estate over the last 2 quarters.
OK, that's interesting. And Jose, can I ask you about non-performing loans and the geography of those? Because you report, your report today talks about an increase in non-performing loans and an expectation that that continues from here, in particular non-finance companies, SMEs very much in focus. Is this a German story or is this a pan-European story?
No, it's not just a German story. It's a pan-European story, but let me qualify that in 2 dimensions. First, we're starting from a very low basis of non-performing loans. It's been the lowest it's been in the last 15 years. So the overall status of non-performing loans across the euro area is low. It's increasing, and it's increasing across all portfolio segments. It's increasing primarily on SMEs, as I said before, and commercial, as you said, and commercial real estate. But I would say that it's not only linked to Germany, it is linked to the economic cycle. So to the extent that the economic growth in Germany, for instance, is lower than in other parts of Europe, I'm thinking now of the Southern European countries, we do see a bigger increase on NPLs there. But it also depends on the structure of the loans, whether on a flexible rate or a fixed rate. So I would not only link it to a single country.
OK. Jose, do you see that trend continuing into 2025? Or is 2025 a year, even if you get lower rates from the ECB, where some chickens come home to roost on that front?
Yeah, I mean, in 2025, it will depend on 2 aspects. First, as you say, on the interest rate evolution. If we see that interest rates are continue to drop like they've been doing over the last quarters, then we will expect that will put less pressure on loan lending. Therefore, NPLs will not increase as much. But of course, it will also depend on geopolitical tensions, which we highlight in our report as one of the key areas of concerns going forward, and how those geopolitical tensions materialize throughout the economic activity, and as well on the overall evolution of GDP for the euro area for next year, which at this stage is not very good, but not very bad. So if it continues there, we expect the NPLs to remain constant. If it gets worsened, we likely will see NPLs increase.
OK, interesting. And you talk about geopolitics because for the first time you've kind of broken out and given some detail around exposure to geopolitical risks for some of these countries in terms of credit exposure. What are the risks at this point as we look to those potential Trump administration tariffs? How concerned are you?
Yeah, I mean, we do highlight in the report geopolitical risk as a major area of concern. We say clearly that it's not the direct exposure that European banks have to potentially, high-risk geopolitical countries, but it's more the indirect exposure they have mainly through the activity of European multinationals around the world. So therefore, as you said, tariffs will have a big impact there. Our biggest area of concern is credit risk at this stage, but I would say it's not only credit risk. We also think that market risk may increase significantly. We see turbulence in financial markets, and we're also putting a lot of emphasis in the report on operational risk coming out mainly through cyber risk. We have seen cybercrime increasing, cyber incidents also increasing throughout last year, which affects operational resilience. And if the geopolitical tensions increase, we should expect that cyber attacks and cyber war will become more prominent, and that will have an impact on the sector. So a lot of focus is on operational risk.
Do you think France is a credit risk? we talked a lot during the European crisis of the doom loop between sovereign and bank. Do you worry about what is happening in France? Do you think there's the possibility that we could see a revisiting of that risk?
Well, I do worry about what's happening in France because there is uncertainty about a very basic variable, which is obviously the stability of the government and the budget for next year. So that's an area of concern. Now, do I worry about potential link again between like a sovereign crisis and a banking crisis? I hope not, because we have made a lot of progress in the banking union over the last 10 years. That link has weakened. It still remains. There's still a strong home bias in the portfolio, in the sovereign portfolios of banks towards the domestic countries. So that's an area of focus that we've been highlighting over the years. But nevertheless, so far the situation, in France has been that the banks continue to be robust. We're seeing a little bit of turbulence around political incidents in the spring of last year, earlier last month in November, we also saw that, but so far has been smooth. So I hope that we continue to be robust. As I said before, the overall situation of the banks, including the French bank, of course, is robust. So that's a good starting point.
Great to catch up. Thank you very much indeed. José Manuel Campa of the European Banking Authority, where, of course, he is the chair. Thank you very much indeed. French stocks are lower going into the market open this morning. This is what the numbers look like. We'll be back with the details of the opening trade in just a moment. This is Bloomberg. Monday morning, good morning. New month, new P&L for investment managers. Some things, though, stay the same. City continue to lose. Politics continues to dominate. That appears to be the theme right now going into this Monday morning session in terms of European equities. The lesson from Friday I don't think is a particularly useful one. European stocks rallied. It was a reasonably sort of truncated session in the United States. So if you looked at this, you think, actually, European futures are going to do very little this morning. However, throw in a bit of French politics, throw in a bit of Stellantis and Tom, things look a little bit more exciting.
Yeah, merci la France, because right now European futures pointing lower by a full percentage point after the gains that came through for European stocks last week. And this is the culprit. The CAC current pointing lower by 1.4%. Yes, Stellantis is part of the story, but also the standoff between the National Front, of course, and the current government over in France around the budget and increasing risks, it seems, that there will be a vote of no confidence. Here in the UK, FTSE 100 futures are currently flat. Anna.
Yes, let's have a look at some of the individual sectors and stocks that could be in focus then as a result of the French news flow and other corporate news flow as well. We focus in on those French banks. I've seen expectations that they will be down at the start of trade today because of the tension in the French politics. The Finance Minister saying they won't be blackmailed. They've moved a little on electricity, don't want to acquiesce to the other RN demands. So it does look as if, unless there's a miracle, in the words of the RN, we head towards the fall of the government over in France. Stellantis in focus as they lose their CEO, push out the CEO. They still have all the same issues, and we could see substantial weakness at that particular business. No change in the guidance, but the uncertainty at the top is enough. Prosus in focus. Many more IPOs still to come for Prosus. So says the CEO of the technology investment business. He told us that here on this programme, Guy.
Absolutely. The market open this morning is brought to you in French because I think that's going to be the focus. We are going to watch very carefully to see how long it takes the CAC 40 to get going this morning. So here we go. The opening trade, the FTSE 100, nothing happening there. Most markets today aren't going to do a great deal. I think that probably is the expectation. There's no clear steer. Got a busy week coming up, but there's no obvious kind of guidance for most markets. However, the French market is going to be different. So the Stoxx 600 is barely moving this morning. Wait till France opens. You're going to see that number move a great deal more. The IBEX is down by 0.5%, so a little bit more movement when it comes to the Spanish market this morning. Could take a while to open the DAX. No, there we go. It's down by 0.2%. It doesn't have much news flow this morning. The CAC is now open, though, and it is down, Tom, by 1.21%.
OK, and we are laser focused as a result, of course, on what is happening across the various sectors in the CAC 40. We keep an eye on autos as well, of course, given the change at the top at Stellantis with that stock called lower. Right now, in terms of your sectors then, this is the broad picture. It's pretty mixed, given the top line is that European stocks are currently down 0.2% as we wait for some of those other major indexes to open. Of course, the pressure coming through for the CAC over over in France. In terms of some of your biggest movers right now, just in the first few seconds then, just loading up the print for you as we get the numbers coming through. On the downside, you get the likes of SocGen over in France, so some of the French banks are under pressure, and again, the expectations, you get weak growth as well as the budget challenges, and then lower rates from the ECB. The BNP Paribas is also down 2%. SocGen pointing lower, currently down 2.6%. What else are you seeing?
Everything in the French market is down. Everything in the French market is lower this morning. There's not a single stock in positive territory. Hermes, which is the ultimate safety trade, is flat as we speak. But Schneider, this is points in terms of what's coming off the CAC 40. The order is Schneider, LVMH, Total, Stellantis, AXA, BNP. So the financials are in there, but it's interesting in terms of the points drop. It's actually led by LVMH this morning, which is down by 1.5%. So there is a focus on the French banks, but this is a broad French sell-off that we are seeing. Hermes is now in positive territory. So there's some split in the luxury sector.
Yes, and is that because anybody is focused on the Chinese data and the weakness in the Chinese consumer? Probably not. It's all a sentiment story around France, one assumes, today.
So is there an opportunity in there? Are there babies being thrown out with bathwater as the French market comes lower?
In the pan-European context, when we've seen European stocks sold off versus US stocks because of the Mag 7, because of Trump, we've asked that many times of equity strategists, haven't we, about whether things, babies have been thrown out with bathwater.
Well, you're teeing him up very nicely, Anna, to bring in Sharon Bell, of course, standing by, Senior European Equity Strategist at Goldman Sachs. Sharon, thanks for joining us in the studio. Are there opportunities in France, particularly around industrials, materials, businesses that have less exposure to the domestic economy of France, more exposure to the global economy, and have that valuation play? Are there opportunities in France?
Yeah, I think there will be opportunities out of this, but of course the risk premium has gone up. And I also have sympathy for the view that, I take an example, the UK, after Brexit, we argued there were lots of opportunities there, but it underperformed for a long time. So I think when the risk premium rises it's not just the political uncertainty at the moment, it's also what the underlying cause of it, which is the deficit, which is not easy to correct.
Do you see a risk beyond France, or is this a story that is contained?
I think that the French deficit obviously impacts France and French politics, but I think there is an underlying problem across the whole of Europe in terms of growth being weaker in the last couple of years than we would have forecast or hoped at the time. We've got quite weak growth over this next year. So it's not just the fact that there's a deficit, it's also the fact that you don't have a picture of very strong growth that might help to cure these ills.
Is all the bad news in? How much more bad news do you think we could get in Europe? Because it feels like there's an awful lot of bad news already priced in. If I look at the relationship, particularly with the United States.
Yeah, look, and I understand. The US premium, as it were, the valuation premium of the US is sky high at the moment. Yeah. So I can see the gap being extraordinarily large and arguably too large relative to the fundamentals, particularly given a lot of European companies, including some of the French ones you just mentioned, are very international, just like some of the US companies. So why should the European ones trade at such a big discount? Having said all that, I think it's the US at a very large, high valuation, rather than Europe in and of itself being super inexpensive. If I look at Europe's PE at the moment, it's 13.5 times forward earnings, next year earnings, which is about average. It's about 30 or 40-year average for Europe. It's the US that trades at a very high valuation.
You recently downgraded your outlook for Europe. Is that based on the expectation that news does get worse, or that it's just really hard to convince US investors to put money to work in Europe?
I mean, both really a little bit. I mean, we do expect, we do have growth below the consensus forecast for this next year, so we do expect a bit of worsening growth figures. But not a recession in Europe, I would say. And you could argue that some people are extremely bleak on Europe, and we're not in that camp. But we do expect the economic data to get, certainly not recover at the pace that the consensus expects, unfortunately.
Sharon, when it comes to European corporates and things that might have been overly sold as a result of, well, before the French crisis we were talking, or in amongst the French crisis we were talking about US politics and what that does, the tariff story, for example. Are you looking for European companies that have exposure to the US and to that growth story there, and crucially produce in the US and therefore are less likely to attract the ire of an incoming president? Are you looking for those particular names?
Companies? And look, you can find lots of them. We do like those, yes. So, we have a basket of companies, US exposure basket. With the companies in that basket, they have almost 60% of their sales in the US. which sounds like bad news, because if they're selling to the US and there's going to be a load of tariffs, Tom, that doesn't sound particularly good. But they generally just own US businesses. They have US employees, US assets, and US sales. So in a way, they're US businesses embedded in the European stock market. Now, they do trade at a valuation premium to the European stock market, which I'd expect, given better US growth, not such a chance of higher taxes in Europe, in the US, etc. But they trade at a big discount to the US market, where their exposure is.
It does make you wonder whether they just, see ya, going to go and relist.
In the United States, and have that valuation in the US pull up the rest of their European business. I don't know if that's not.
I mean, we have lost some companies out of that particular basket because they have relisted over time. This basket is in some ways a right basket for companies that might consider that. But there are other routes as well to closing this valuation gap. I mean, performance will be one of them, and they have outperformed recently, which is helpful. Also, M&A. So US companies buying, and you've seen an element of that. There's private bids for these types of companies as well. So there are other ways of closing the gaps.
One thing I was looking at over the weekend was, and I appreciate this is more of a US exceptionalism story than the European narrative, Sharon, but I was looking at I think it was SocGen putting out some research talking about how in Japan in the 1980s everything looked exceptional and nobody expected that exceptionalism to end, and yet it does end.
It did, yeah.
It really did, and it does end. And I mean, I'm not saying there are direct parallels, but is the team thinking about the US exceptionalism in that way in any sense, or you just see it continuing?
Look, for this next year, yes, in the sense that we are overweight, the US and our sort of recommended asset allocation relative to places like Europe. But the valuation gap is huge at the moment between the US and Europe. A lot of its exceptionalism is already embedded in the price. And over the more medium term, my colleague David Coston, our US strategist, published saying that he thinks that returns on the S&P will be quite low in the medium term. 10-year return of 3% per annum. Not a huge bear market for the US, but something which is pretty low return, given the fact that you're embedding a lot of its future growth already in the current valuation.
So that's a long-term view on the S&P in terms of what you could see in terms of equity performance. In the near term, is there a case to be made that maybe you want to be betting on slightly better earnings as orders are pulled through and pulled forward in anticipation of tariffs? Could you be looking at slightly better Q1, Q2 on that order story?
Yeah, it might be, and it's a little bit of that maybe, or maybe and some inflection in China as you get people's view that stimulus will help there. You may see a little bit of that, but the momentum in the economic data in Europe has still remained very, very weak. We had PMIs, I think, the week before last, and they were soft again. So my view is it's not completely obvious that you will see a big turn in economic data in the near term.
You have a buy British call in your note to us.
Yeah.
What is the underpinning
What's
to
the
that
underpinning
view?
of that? It is in the context of Europe. So we are looking for Europe to underperform or underweight Europe, but within the context of Europe. We do like the UK, and the reason we like the UK is we believe the UK is exceptionally good value, and you can find a lot of these companies with huge amounts of international exposure in the UK with lots of dollar earnings, and we're expecting the dollar to remain reasonably strong. So given that, we quite like the UK. It's cheap. It's underpositioned in, it's got a lot of international earnings. Also, the economic data in the UK, I mean, it's been mixed recently. Some of the sentiment data has been weaker, but we think growth in the UK will be better next year than in Euro area.
OK. Sharon, thank you very much indeed. Sharon Bell joining us from Goldman Sachs, equity strategist. Let's talk a little bit about what is happening with the Core 6. I want to flag an error that I've certainly made and we may have made. LVMH is under a little bit of pressure this morning, and are just flagging out, I think, probably with the assistance of various other...
teammate and a viewer.
Yes, emailing in. LVMH has gone XD this morning, which is why we're seeing that stock maybe under as much pressure as it is relative to a French market that is down as well. But that's one of the reasons why you're seeing some of the losses maybe being greater, it appears, on the French market than maybe you would have thought, and why we're seeing the breadth of the losses maybe we are seeing in France. But nevertheless, the French market is under pressure. You are certainly seeing the auto sector firmly under pressure. Even Ferrari is giving back a little bit of ground this morning. But elsewhere, ASML is down. You've got Schneider down 1.36% as well. But some of the safety plays, look at that, the defensives in the form of the pharmaceuticals and Nestlé doing a little bit better this morning in terms of their performance. But thank you for keeping us honest. we may have missed that one. Ex-dividends that don't come on a Thursday always confuse me.
Yeah, very annoying.
To be brutally honest. I can't check all of them. And I do get a list, and maybe I don't always check the list as carefully as maybe I should. But LVMH is a big one to have missed. Let's talk about some of the details we're watching elsewhere. Joe Easton is here with those.
So Stellantis is one of the big decliners in the auto space, Guy. You mentioned the auto weakness. Stellantis coming down the most since September, following surprise news of the CEO stepping down. Now, Morgan Stanley analyst writing in a note that he was really well liked given his turnaround efforts and cost cutting. So it is a surprise for them, and they expected it to be taken negatively by the market. And that's what we're seeing. It was down around 7 or 8%, actually went into a halt, now down 5% for that one. Then in terms of the French lenders, we're seeing a lot of the losses concentrated in the French financials today. Soc Gen, Credit Ag and BNP all slipping around 1.4%. Strategist over at Otto writing that actually the uncertainty around the French budget probably not priced in yet. They're predicting 5% downside potentially in the CAC 40. Then in terms of Delivery Hero, an interesting one out of them, they are saying they're going to make all of their drivers in Spain, their Spanish unit Glovo, they are going to become employees rather than contractors, and they reckon that's going to cut their profit by around 100 million euros for the year. According to them, that's breaking on the terminal. A bit of a profit warning for that one. In terms of rating changes, we've got a decent one for Novo Nordisk. Now, Exane likes the CagriSema data. They reckon that that could be a potential boost. We're waiting for that to come out over the next few weeks. It's the big new obesity drug for them. Exane reckons that will boost the stock on that one. In luxury, Swatch is downgraded to underweight over at JP Morgan alongside Kering. They've got a big note on the sector looking ahead to 2025 and don't see a turnaround at the watchmaker for a while, so that one's slipping at the moment. But there's also a contrarian call on Burberry, a bit of positivity. Finally, Deutsche Bank reckons that Burberry could be about to rebound following a 50% decline this year. It's the first time they've had a buy rating on that stock, according to our data, and Burberry edging very slightly higher this morning in London.
Joe, thank you very much. Joe Easton from our equities team with an update on all of those stocks this morning. We need to tell you what is going on with Stellantis. We'll do that shortly. Shares under pressure after the CEO stepped down. The stock is down by 6.5% this hour. They've not changed the guidance, but the uncertainty at the top is enough to drop the shares yet again this morning. More on the auto sector coming up. This is Bloomberg.
Nearly 17 minutes into the new session, new month, new P&L, same stories, I would argue. The French market firmly in focus this morning, being dragged down by French politics, Stellantis and LVMH and Christian Dior going ex-dividend, which we missed earlier, so I'm just going to keep repeating the fact that we missed it. But that seems to be the basic story this morning that is driving the European narrative. Let's turn to one of those two stories in a bit more detail. The CEO of Stellantis, Carlos Tavares, has resigned. Did he resign? Was he pushed? Probably resigned, but with some pressure. A dispute over the board about how to reverse the weakening sales story, the stock slump that we've been seeing. Over in Germany, there's also issues. Workers at Volkswagen set to go on strike after talks between union leaders and management broke down. To track both of these stories, we turned this morning to Ollie Crook, who joins us from Berlin. Let's start with Stellantis. The European crisis has claimed its first major CEO. This is the fourth biggest car company in the world. Talk to us about how this came about. This felt like a sort of slow-burning fuse that seems to have accelerated a little bit over the last few days.
Yeah, Guy, it's one of those classic slowly at first and then suddenly moments for Stellantis and the CEO here, Carlos Tavares, who is now no longer, as of effective immediately, the CEO of the company. It really went very quickly from unanimous support from the board into basically creative differences, strategic differences is what the board was talking about. And basically there's been this sense, Guy, that ever since that profit warning back in September that sort of already began speculation about a possible replacement for Carlos Tavares, he moved really quickly back then to sort of squash those rumors. He got rid of the CFO, he got rid of the COO, he got rid of the COO for North America, replaced the brand heads for Alfa Romeo and also for Maserati. All of that very swiftly to sort of quiet those conversations. That obviously sort of resurged. We got it from John Elkann, the chairman of the company now, basically saying that they are going to find a new CEO that they hope to have in place at the beginning of next year. They had started the CEO search at the time when this sort of profit warning was sort of issued, but there has been this sort of sense that this company has been sort of staggering forward ever since that. And we should say, I mean, the shares are down again another 6-7% today. This is the worst auto performer in Europe out of all of the companies, down almost 45% this year. So really sort of a really sort of important moment here. Carlos Tavares really basically presided over this business since it came into being back in 2021 with the combination of PSA and FCA Fiat Chrysler. But so really a sort of critical moment here. We wonder sort of how much is this for more to come across this industry that's really struggling to turn it around.
Yes, and that takes us on to how much of this is a Stellantis problem. And we've heard a lot about the tense relationships between this cost-cutter CEO and the dealers and the unions over in the United States. But how much of this is a wider industry problem? Because there are very few car makers that we are not talking about struggling at this point.
Yeah, so listen, and I mean, I think that for Stellantis, what is sort of interesting about them when you sort of contrast them to many of the German automakers is what they didn't have is the China problem. Their exposure to China was a lot smaller than all of these sort of players here in Germany, whether it's BMW, Mercedes, Volkswagen. What they did have is a U.S. problem. They had this huge bloated inventory, was just not moving off of the lots. And what Carlos Tavares was really known for, and it's funny, you talk to other executives in the industry who were observing basically what was going on at Stellantis. Some of them were really sort of with great incredulity at how much he had managed to cut costs through the years, really sort of gutting a lot of the brands. And as you can see on the chart there, you know, that really served Stellantis quite well for a number of years, particularly in the beginning of this year. But that has come to roost, sort of coming down really rapidly off the back of that and coming sort of more in line with a lot of the other car dealers. And I think that part of the issue with some of the cost cuts, some of the critics of Carlos Tavares is that he basically sacrificed too much, and you could really feel it in the quality of the products, particularly in the United States, where they went from about 12% market share earlier last year to about 7% market share, where they're really struggling.
Yeah, that's a drop, isn't it? From 12 to 7% on the market share in the US. Look, you talk about the German automakers. There's been some cost-cutting there as well, at least plans for cost-cutting, and part of that could involve shuttering factories, striking then, at least strikes beginning, and this time focused on VW.
Yeah, that's right. I mean, this is going to be the first walkouts of what is probably going to be a fairly protracted process in these negotiations between the unions and the management over at Volkswagen, the Volkswagen brand. And let's remind people kind of where the starting point is for management here. They're talking about closing potentially 3 factories. We're talking about the order of potentially tens of thousands of job cuts. We've been talking about a pay freeze through 2026, 10% pay cut across the board. Basically, we've heard from the brand CEO in the past saying that there is basically no way that they see to get to the cost cuts that they require without closing some of these factories. Where we are now is the unions basically submitted their proposal to cut 1.5 billion euros worth of costs. VW said that basically doesn't go far enough, and the arithmetic isn't quite there, that they basically need to do more cuts across the board. But where we are is at the very beginning of this process. We should say these are very controlled warning strikes. These are not the kinds of strikes that we saw last year with the UAW, but this could be basically the appetizer for that if there's no progress made between these two sides.
OK, warning strikes taking place today in some parts of that VW ecosystem. Bloomberg's Oliver Crook with the details in terms of the big lines crossing around this auto sector with Stellantis in focus as well. Ollie, thank you. French financials, meanwhile, under pressure, as we've noticed, the banks being hit today on the back, of course, of the continued French budget tensions. Here to break down all the market reaction is Bloomberg equity reporter Julien Pontus, joins us from Paris. Julien, talk us through what is happening in the equity markets of France as investors adjust to the latest positioning around this budget. Some pretty tough lines coming through from the national rally.
Yes, they said it would take a miracle for them not to vote the government down. So on markets, we're seeing a lot more of the same that we saw in the previous weeks. Basically, the spread between France and Germany on bonds is widening a tad. Financials are under pressure. The CAC 40 is underperforming again. But it's not an extreme reaction. It's really more of the same. But when you add up all of this, you have the CAC 40 that's down roughly 5% this year, when the stock 600 is up 5-6%. The 10-year, the French 10-year bond is trading at the same level as Greece. There's a lot of tension. Today, at the moment, we're seeing more of this, or more, more downside pressure. There's nothing dramatic at the moment, but I mean, given that the government could fall this week, there's more to come.
Julian, we were speaking to the head of the EBA a little bit earlier on, who described French banks as robust. How much concern is there regarding the link between OATs, the French bond market, and the French banking system? We have seen this risk in the past. Are people worried about this risk emerging again in the future, this connection between bank and sovereign?
I think you mean the doom loop, whereby, the sovereign bonds can take the banks down. We're not there yet at all. I mean, in terms of panic on the bond market, it's a 3% yield. So it's still, when you look at the yield, you forget the spread with Germany, with other countries, and you just look in absolute terms. I think that at 3%, it's really not the end of the world. We're not in a position of stress. If you're an equity investor, it really doesn't look good in terms of should you invest in a French bank instead of a Spanish or an Italian bank? That's a real question. But I don't think there's a stress in the sense that, in terms of their solvability.
And Julian, where do we look to next? There are perils, there are dangers and clues that we might head towards confidence votes today, Wednesday, Friday. Could happen any day, I suppose.
Yeah. Yes. It's something in terms of volatility. A burst is expected, I guess, anytime next. You had Kevin Tozé from Carmignac a bit earlier on the program. And I was speaking to him a bit earlier as he came into our bureau, and he said it's basically very difficult to be bullish, euro, bearish, French CAC 40 this week. Anything could happen in the next 72 hours. So at the moment, with the national rally, having such a tough line, saying there's a 99.99% chance that they will vote the government down. No, there's a lot of room for things to get worse. But at the moment, as we speak, it's still a bit limited. I think people are still waiting to see whether this is really, this is a game of chicken, or are we really going to a clash?
Julian, thank you very much. Thank you for joining us. Julian Ponthus in Paris for us. And interesting, going back to Sharon Bell's, echoing some of what we heard from Sharon Bell a little earlier, there might very well be opportunities, but in the very short term, the risk premium has increased and there's concern about the deficit, and so it's difficult to make that positive case right now for French stocks.
You look at what happened in the UK. That was the point that she made. There were many babies thrown out with bathwaters at Brexit, but it took a long time for some of those kind of opportunities to emerge because the general market sentiment is so negative.
Coming up on the programme then, Joe Biden heads to Angola. We'll focus in on the US foreign policy front. The first US president to set foot on the continent since 2015, at the tail end of his administration, of course. What does that mean for the future? We'll get an update. This is Bloomberg.
Welcome back. This is the opening trade. We are 30 minutes into today's session. European stocks are down by 0.2%. Doesn't tell the full story, though. It's what the seeing in terms of the action in France, with the CAC 40 lower by, as you can see, a little over 1%, with Stellantis, Renault and a number of the banks, including Soc Gen, Crédit Agricole, all of the banks, in fact, in France, lower by between 2%. 8% drop is the print you're seeing on Stellantis right now. The politics of France, of course, in focus, and the anxiety around the budget. Here in the UK, though, FTSE 100 just off by 0.1% at 8,280. Now, US President Joe Biden will visit Angola in the first week of December, honouring his pledge to visit the continent of Africa, just weeks, of course, before he leaves office. The trip will be Biden's only visit to Africa during his time as president, as he seeks to deepen the US commitment to the continent. Bloomberg's Africa correspondent Jennifer Dabasaja is in Luanda, the Angolan capital. Jen, what can we expect then from this visit by Biden, and why is he doing it so late in his presidency?
That's a good question, Tom. I mean, he is doing it late, but I think we should acknowledge the fact that we haven't seen a sitting U.S. president visit the sub-Saharan African region since 2015. We haven't seen a sitting U.S. president actually visit Angola. And so for this U.S. administration, they say it is a good marker, especially when you think about the end of this president's term. And he is trying to fulfill that promise that he made very early on in his administration to strengthen relations globally, including here in sub-Saharan Africa. And so this trip is very much a part of the past, as it is about what they're hoping to be the future. So the past, when I talk about that, the Angola port here was a major hub for the transatlantic slave years ago. So there's a number of those in the diaspora who are hoping that is a part of the trip. We will see some of them on the trip with President Biden, but it's also about the future. And when I talk about the future, the U.S. is calling it high impact and economic opportunities that they see for this trip. The U.S. Pledged back in 2022 to invest $55 billion into sub-Saharan Africa. They say they're 80% of the way there. Angola was the fourth biggest trading partner with the U.S. in sub-Saharan Africa in 2023. So this is important for them. But really, the main part of the show really here is the Lobito corridor. This is this railway that is very critical to transporting minerals. And we've seen the U.S. increasingly invest into this railway. We will see the president make a trip there. And when we talk about the transition, this railway is very important for it, considering the abundance of copper and cobalt that is in this area. And from the Angolan perspective, they see this potentially as an opportunity for the U.S. to say that Angola is open for business. I think we should remember that Angola left OPEC not too long ago, and they've been struggling for a while to diversify their economy away from oil. And so the president has said potentially this gives investors the clear go-ahead that they can start to invest in other parts of their economy, hopefully to see it grow. So yes, this is about two different sides, bilateral relationship, but also definitely a number of people who are going to be on the ground here hoping to get something out of this trip.
OK, so that's why the Angolans are pleased to see the Americans. The Americans have a reason to be there. The Americans perhaps also want to get in the way of some other investment streams that have been coming into Africa in huge force over recent decades, Jen, and that's from China. How does the US wish to reshape that flow?
Yeah, I mean, Anna, I think it is no secret that Angola has been one of the major countries in sub-Saharan Africa that has been indebted to China in particular. We've seen China invest billions of dollars across sub-Saharan Africa for infrastructure. And so Angola does share a close relationship, not just with China, but also with Russia. And so when you ask the U.S. officials about what this is about, they don't say that it is about having to ask a country to choose sides, but instead what they say is giving a country choice, and hopefully then they're offering or they're giving the opportunity then to a country like Angola to demand more. And yet still, Angola still sees this as an opportunity to work with all partners, and they need that when you think about this economy. But the U.S. really does need to present an option for this country that is different than what we've seen from China. President Biden has actually criticized China's previous initiative, the Belt and Road Initiative, as calling it a debt and noose agreement. And so hopefully we see a new administration, or this administration, excuse me, rethink what a partnership and what at least lending and investment actually looks like, different than what we've seen in the past. Anna?
Jen, I'll pick it up. Thanks very much indeed. Jennifer Sabazaja joining us from Angola as we await the arrival of President Biden. Looking forward to the coverage around that trip. Let's switch our attention now to what is happening with the wider trade story and how US President-elect Donald Trump is going to affect it. The debate, of course, is swirling over how far Trump will go and will follow through on his tariff pledges. The import levies are something he's been clear are a political policy proposal.
To me, the most beautiful word in the dictionary is tariff. And it's my favorite word. It needs a public relations firm. There are no tariffs. All you have to do is build your plant in the United States, and you don't have any tariffs.
Today's Big Take here at Bloomberg looks at the drama and the realities of Trump's tariff war for more now, and the various scenarios we could be looking at here and how they're going to play out. Bloomberg's trade czar, Brendan Murray. Nice to see you, Brendan. Nice piece. How does Donald Trump deliver tariffs and not inflation?
Well, it's interesting what you've seen over the past week. Trump has threatened tariffs on countries that account for half the world's population. So that's a lot to digest. And so what we've done is we've taken the expertise of the Bloomberg economics with the reporting of Bloomberg News, and we've plotted out a plausible scenario toward tariffs that both deliver the campaign promises that the incoming president has laid out on the campaign trail, and doesn't wreck the economy. So it's a needle that could be threaded, but it's one that's a very careful line he has to walk.
What is the most likely scenario that you've been able to map out then?
It's one in which tariffs come in phases. They come in blocks, targeting certain products, and targeting, at least initially, products that are not consumer end products, but they're capital goods, machinery, parts, inputs that go into final products. So those conceivably, or at least that's what the economic team did, Trump's economic team did the first time around, they would target those first, so consumers aren't the ones that get hit, because of course he rode this election win on the back of an economy that voters were very worried about inflation.
So one example of where the tariff story gets quite nuanced, maybe, let's take the example of Canada, and he's already threatened to put certain tariffs on Canada, hasn't he? This was to do with drug flows and migration, but he's threatened to put those on, but then instantly a lot of people point out, well, what about all the energy imports from Canada? That's going to push up inflation and the cost of energy for American people. That's an example of perhaps where things will become more nuanced. It won't just be about, all imports from Canada.
Exactly. What we've heard from people over the past week is that these threats that we've seen, these social media posts, are really the beginning point of negotiations. They're not where they'll end up eventually. It's as we saw, Justin Trudeau got on an airplane, flew down to Mar-a-Lago, pledged more border protections and that kind of things. Mexico took a different tact. They got a bit more on the offensive and said, yeah, well, if you put tariffs on us, we'll retaliate against you. And those tariffs that you impose on us, there are a lot of American companies that they're going to suffer because of it.
Yeah, and that reaction function is going to be really fascinating to watch, isn't it? What difference do the people around him make, if any, Brendan? What's our best assessment of whether they really get to influence where this goes? Scott Bessent and the like, and Howard Lutnick, or whether this is really just all going to be decided by Trump?
Well, the people will make a big difference, and what we've seen take shape of Trump's trade team is a mix is a balance of those who will try to make Wall Street feel not so worried that this is going to crash the economy. But then again, you have others. The USTR nominee Jameson Greer is an acolyte of Robert Lighthizer, who's the big the big China hawk. So we'll see an internal debate that'll be very interesting to see how it plays out over the first 6 months, to see if the China hawks, if they're allowed to go big the way they want to go big with tariffs, balanced by someone like Scott Bessent, who will say, hang on a second here, we don't want to crash the stock market, we don't want the economy to slow. So that we'll see that internal debate play out, and as a result, our plausible scenario and our big take today says will be something other than the worst case scenario, but something that does have a big an impact too.
We don't want to crash the stock market. Could that be a way to argue your point with President-elect Trump? We've talked about that on this programme. Maybe that is something that is firmly on his Bloomberg dashboard. Thank you very much to Brendan Murray, Bloomberg's Brendan Murray, with a take on trade, of course. Coming up on the programme, the French government will not be blackmailed. French Finance Minister Antoine Armand speaks exclusively to Bloomberg, to our colleague Caroline Conan, as his government heads into an impasse with the far right over the budget. French banks starting the week in the red, those stocks trading down. We'll get more on this. This is Bloomberg. Welcome back to the opening trade. We are 43 minutes into that opening trade here for European equity markets, and you can see that the French market is underperforming, off earlier lows, but still down by 0.9%. It's a wide range of stocks moving lower, but the French banking sector is certainly amongst them. We see weakness there. We also see the political story in France being compounded, at least from a stock market perspective, by the specifics around Stellantis, and that stock is also under pressure in its French listing, down by 8%. Let's stick to the politics in France, though. France's Finance Minister has rejected Marine Le Pen's ultimatum over a new budget law, even as the far-right leader continues to threaten to push for a vote of no confidence against the government. Bloomberg's Caroline Conan spoke exclusively with Antoine Armand.
This government, in the last week, has clearly demonstrated its willingness to ensure that France could have a budget through evolution in the budget. And let me remind also that the parliamentary debate is still ongoing, and we have to wait until the end of this debate. But as you said, France is at a critical time. We have the arguments, we have the fundamentals. We have a perspective to reduce public spending and to cut borrowing, which is very important for France, but for Europe as well. So let's remind the political leaders in France that we have a common responsibility, and that this common responsibility includes voting, adopting, passing a budget.
Does that mean there's going to be more compromise, more concessions before Monday night, which is the deadline that Marine Le Pen has given you?
As I said, the French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
I understand you're willing to perhaps compromise, but Marine Le Pen has some specific concessions she wants from the government, including that all pensions be indexed on inflation as soon as January. And she also wants the government to give up this plan to abandon some drug reimbursement. On these two specific topics, is there any way to have more concessions from the government?
Let us not just focus on the Rassemblement National, because, as you know...
but it's key.
It's key, but it's not enough. And as you say, for a vote of confidence to be adopted at the French Parliament, you would need to have the Socialist Party, the left parties, to vote with the far-right parties. So it would not only be the responsibility of Marine Le Pen's party, it would also be the responsibility of French socialists, French ecologist people who are willing to oppose to Marine Le Pen to vote together. It would be a very bad signal politically and economically for these countries, for our country, and for these parties who are saying and claiming that they could stay government parties.
Does that mean you're trying to negotiate with the Socialist Party, not the National Rally?
No, we are not focused on with whom we negotiate or not. As I said, the government is a government of dialogue, of respect, of co-construction. This budget has been co-constructed. It's not the result of just a government project. It's evolving within the days and the weeks of the parliamentary debate. Will still be open, but not to blackmail.
Very interesting. Bloomberg's Caroline Conan joins us now from Paris. Really fascinating conversation you're having there then, Caroline. So he says they're not open, they don't want to be blackmailed, but they are open to dialogue. He was making that point. There's already been dialogue. It's a co-construction, not just the brainchild of the existing government. But you were trying to push him on very specific concessions that the RN wants to see. What else did he have to add to whether there could be more? Because they've already made concessions around electricity.
Clearly, his goal here was to reassure international investors, not giving Marine Le Pen any more concessions, because, as you heard, they've already made some concessions on prices of electricity, but not only, also, for example, on this reduction of some social contributions from small companies. And clearly, they're not open to really adding a lot to the deficit. Already, these concessions they already made are costing approximately 10 billion euros. Out of the 60 billion euros of spending cuts that they had already planned. So It remains to be seen. We know that time is running out because Marine Le Pen has set this deadline of 3 p.m. French time, 2 p.m. UK time today to see if she's going to back a vote of no confidence against the Prime Minister Michel Barnier this week. We heard from the president of the National Rally, Jordan Bardella, this morning saying it would take a miracle to change her mind. We also heard from another MP saying that Michel Barnier has to de-Macronize himself. So here we go. Get away from Macron, that's a new verb. And perhaps also what I find interesting with the conversation with Antoine Armand is that he's also calling for the responsibility of the socialists, because, you know, the socialists, they have 70 MPs, so they can also move the needle and they can also change the outcome of this possible vote of no confidence.
Caroline, if the RN decides to back the motion of no confidence later on today, walk me through the rest of the week. Walk me through the political choreography of how this is going to work.
Then it all goes back to whether actually the socialists also back this vote of no confidence. Technically, the government needs 44 out of the 70 socialists in order to overthrow this government. Technically, the vote of no confidence will probably be presented by the far left as soon as today. The vote of no confidence could take place as early as Wednesday. But then they also have to vote on the finances of 2024, so backward looking, and that vote could take place as soon as Friday. So there's two possible votes of no confidence this week. And then if the Barnier government actually survives this week, then they will have to vote on the overall budget the week before Christmas, so potentially facing another vote of no confidence on December 20.
OK, Bloomberg's Caroline gone up. Thank you very much indeed with that exclusive interview and what to look ahead to in terms of how this could be choreographed in Paris in the hours and days ahead. Here's what else to be thinking about this week then. Later today, President Biden will be visiting Angola. It is the first trip to the continent of Africa for a number of years for a US president. On Tuesday, it's his first visit, of course, to the continent at all since he's been president. On Tuesday, NATO foreign ministers will be meeting in Brussels. Can they do anything else to support Ukraine? That will be in focus. On Wednesday, some details and some more colour around the health of the US economy with the Fed Beige Book and the 2024 Monetary Policy Symposium. We'll be listening out, of course, for any comments from Jay Powell and whether or not he does lock in expectations from some in the markets that you get another cut later this month. And on Thursday is that OPEC Plus meeting, which was pushed back, of course, amid question marks about how far they can go in terms of returning some oil to the market. And on Friday, it is the jobs data. So non-farm payrolls with estimates of 200,000 for the month of November.
Will it ever end? Will it ever end? Black Friday, apparently today's Cyber Monday. Feels like there's been a lot of online shopping already happening. The first estimates are starting to come in, though, about how big a week it has been for the retailers. Last Friday, Thursday, Friday, into this week. And it looks like it's been a fairly positive one. We are potentially seeing US sales up on last year. Looks like the UK data is pointing us in a similar direction. Looks like this has been led by online. Bloomberg opinion columnist Andrea Felser, though, is here with more detail. So what is it looking like?
It's looking OK. It's not shooting the lights out. It's looking OK. It's definitely been led by online.
Yep.
Footfall in the UK was OK for last week. US, again, much more led by online than in-store. So I think it'll be OK. I don't think it'll be an amazing Christmas either side of the Atlantic.
OK, so keeping our expectations measured. Andrea, my sentiment around Black Friday was I forgot it was Black Friday. I went to go to the shops. Then I realised how busy it was, and I turned right round and went home again before I got anywhere near it. Do other people feel this way? Is it a victim of its own success?
Well,
at least physically.
I think in Europe it should never have arrived in the first place. It's just bonkers. You know, in the US there is a reason you traditionally went shopping the day after Thanksgiving. In Europe, there is no reason to have Black Friday. All you do is give away margin. You know, this should be it's called the golden quarter because retailers, receive a lot of their sales and profits in this quarter. So why are you giving it away on discount? You should be maximising your profits.
Well, how generous were those those discounts this year? How far did they go?
I think they were pretty much on a par with last year. The beauty, there did seem to be quite a lot of deals, and that was borne out by some of the analysts that have looked at the data. The other area where there were deals was on coats, boots, that sort of thing, because we had quite a warm October in the UK. We had a good September, quite a warm October. The US had a very warm October, early November. So apparel did see a lot of discounting, mainly that sort of cold weather gear that they hadn't sold.
I think what we really want to know is what Guy Johnson was buying over the weekend. You've got a renewed wardrobe.
I went to one of the big kind of retail parky places, basically to act as a kind of bag carrier, and they were putting up sort of railing and crowd control stuff.
They knew you were going to be
No, I was there the day before, so this was not for me, Tom. Thank you very much indeed. But they were clearly getting ready for a lot of footfall.
Well, the timing was very good this year because it did coincide with payday, so people would get paid, would go to the Black Friday sales to get their Christmas presents.
And so give us the UK perspective on this then. I mean, you've already talked about how it shouldn't be here and all of that. Yeah. And yes, and I clearly turned tail and went home and did the Cyber Friday thing instead of Cyber Monday. But what's the experience in the UK? Has it been a positive one then?
It looks like footfall was up. I too was in the West End on Saturday. It was very busy.
Yeah.
Lots of people out. Now the question is, does that continue? Have people bought on deal and they won't buy? We need to look at whether retailers now go back to full price. Mm-hmm. They will be trying to, but I think it will be very difficult, particularly in the UK, to
go back to full price before Christmas.
They
or do the discounts continue for those of us who might have missed out?
They do try to. What we tend to see is discounts continuing.
Okay.
And I think
you're all right, Tom.
How much of what is on the shelves is bought specifically for Black Friday?
Quite a lot. So things like electronics, you will find those deals will be agreed, back in the summer, even earlier, because they'll be shipping in the summer. They will be agreed. They will be, at a certain specification, a certain price.
Yeah.
They will be agreed. Things like the beauty gift sets, they will be bought in advance.
It takes a long time for things to get here these days with this, not using Suez. So the trade routes are longer. Andrea, thank you very much. Bloomberg opinion columnist Andrea Felsted helping to talk us through Black Friday. On to Cyber Monday. So as well as lots of cyber shopping, what else do we have to look forward to? Developments. We're obviously watching developments over in France to see what happens there. Mid-afternoon deadline from the RN to get some sort of concessions.
Will they, won't they? Having given such a strong indication that they're putting the government down, to back off at this point?
And as Caroline said, then the focus goes to the socialists and what they're particularly looking for. So this might not all be down to the RN. But we're watching that. We're also watching, as the month goes on, what kind of stimulus we get out of China, Tom? That's a big question.
Yeah, I mean, that was actually a story that was relatively interesting today. So the data, as you said, was pretty mixed. On the private survey, manufacturing came in stronger. But it was the fact they held off on releasing this statement. So we're looking for another big meeting around the Politburo. But absolutely, investors are on tenterhooks about whether that additional stimulus comes through. The yield dropped through 2%, so there's money moving into Chinese debt.
The French market is down, but I hear LVMH has gone ex-dividend.
It has. It was worth saying that for the millionth time. And as we're talking about China on a programming note, join the top conversation at the energy transition at the Bloomberg BNEF Summit. You can scan the QR code there. It kicks off in Shanghai on December the 3rd. This is Bloomberg.